Hello everyone, and welcome to a brand new video on the channel. Today, we're going to talk about the top 5 stocks in 2023. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 5. Walt Disney Company. Walt Disney has 2 different parts to its business. All over the world, Disney parks, experiences, and products run tourist parks. Disney Media and Entertainment Distribution runs TV networks and movie companies, makes and distributes TV shows, and runs streaming services like Disney+, ESPN+, Hulu, and others. Disney also lets other companies use its trademarks and figures on goods and games with a license. Since January 2022, Disney stock has dropped by about 45%. The entertainment company's streaming business has been losing money and not making enough cash to make a big dent in its debt. Also off the table for now are buybacks of shares and payouts. After Disney's September quarter, earnings were $0.20, less than expected. The company revealed that CEO Bob Chapek would no longer be in charge. Even though there are problems with the way Disney is run and earnings have been lower than expected, there are some bright spots. The rise of its streaming business in terms of subscribers has been very good. In its last fiscal year, the company added 57 million new customers. That means there are 235 million subscribers, which is more than Netflix. Disney also just released Disney Plus Basic, a cheaper subscription service that has ads but costs less. After the COVID-19 shutdown, theme park income is on the rise, which is good for the bottom line. In fiscal year 2022, the theme park business made less money than the media business, but it made more money from operations. Expect Disney to keep growing its streaming income in the next few quarters, but with a bigger focus on making money. Number 4. Dollar General. Dollar General is a well-known chain of discount shops that sell everyday items like food and toiletries at low prices in convenient locations. The company sells both its own items and well-known brands like Clorox, Procter & Gamble, Coca-Cola, Kellogg's General Cocoa, Kellogg's General Mills, and more. Dollar General has more than 18,000 shops in 47 U.S. states. Even though the Sub 500 has dropped nearly 20 in 2020, Dollar General stock is up 3%. Dollar General stock is up 3%. This year, the chain has seen both more customers and more money spent by each customer at each exchange. Costs are going up though, which is putting pressure on Dollar General. In answer, the leaders of the company are focusing on making their supply chain more efficient. These measures can help with the current trend of inflation, and they will also help in the long run. In the meantime, Dollar General is growing its income by expanding. The revenue increase of 11.1 in the third quarter of 2022 came from new stores opening and a 6.8 rise in same-store sales, which was partly offset by stores closing. Even though higher products prices put pressure on the gross margin, the company's net income grew by 8% in the third quarter. Dollar General gives value back to its owners by buying back shares and paying dividends. In the third quarter, the company bought back 2.3 million shares and it still has $0.5 billion left on its share buyback plan. The dividend yield is about 0.9%, which isn't the best in the world, but Dollar General's dividend growth rate over the past 3 years has been more than 13% per year. Dollar General does well when things are bad. If the economy stays the same or gets worse in 2023, the trends of more traffic and more deals per person should keep going. In 2023, the company also plans to open 1050 shops, including 35 in Mexico. Number 3. Eli Lilly. Eli Lilly is a drug company that makes important medicines to treat diabetes, obesity, Alzheimer's disease, problems with the immune system, certain cancers, and COVID-19. The company sells its goods all over the world with the help of wholesale distributors and marketing deals with other pharmaceutical companies. In 2022, Eli Lilly stock will be up 31%, which is a rare bright spot in the market that is going down. The company did well when its drug for type 2 diabetes, Mounjaro, came out in the third quarter. Other drugs for breast cancer, diabetes, migraines, and other conditions also helped the company grow. In the third quarter, the pharmaceutical company's sales grew by 7% when measured in the same currency. Non-GAAP earnings per share for the same quarter went up by 12%. Analysts think that Lilly's progress will keep going because the company has a strong pipeline of products. Lilly should release 4 more products and another important use for Mounjaro before the end of 2023. Donanemab is a drug that helps people with Alzheimer's who are in the early stages of the disease. The average price goal for Eli Lilly is around $378, which is higher than its present price of around $360. Number 2. T-Mobile. More than 100 million people in the U.S., Puerto Rico, and the U.S. Virgin Islands use voice, text, and internet services from T-Mobile. Mobile and Metro by T-Mobile, which used to be Metro PCS, are the 2 names of this company. Mobile stock is up 20% in 2022 because it is the best in the business at getting new customers. 2 years after merging with Sprint, Mobile's monthly phone business is growing faster than ever, faster than Verizon and at Antec. The company is also making progress in its high-speed internet business. So far this year, it has added nearly 1.5 million new users. Over the same time last year, third quarter sales went up by 4%, while free cash flow went up by 32%. Costs linked to the merger cut the third quarter net income by 26.5% to $508 million. The company is still working on its plan to bring Sprint into the business. Mobile recently raised its guidance for merger synergies because work so far has been faster than planned. Before the deal, the company thought it would save between $5.4 billion and $5.6 billion in cost. The new range is between $5.7 billion and $5.8 billion. The average price goal for T-Mobile shares is $177.87, which is a 25% increase from where they are now. Number 1. Chipotle Mexican Grill. Chipotle owns and runs more than 3,000 quick service restaurants that make tacos, burritos, and bowls to order. There are stores in the United States, Canada, France, Germany, and the United Kingdom. All of these places are owned by the company. Since the beginning of 2022, Chipotle's stock has dropped about 20. Higher prices on dairy, avocados, and tortillas have been a problem for the restaurant company, just like they are for you at the grocery store. Costs for packing have also been going up. Still, Chipotle's food, drink, and packing costs were 50 basis points lower in the third quarter compared to the same time last year. This is possible because the chain has pricing power, which means it can raise prices on its menus to make up for higher costs. We don't know how high Chipotle can raise its prices. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up and do not forget to subscribe. Thanks for watching. See you next time.